Hi, this is Michael Regan with the Regan Team Home Loan Group, and welcome to your weekly real estate roundup for Tuesday, April 14th, 2026. First, we're going to cover the ADP jobs report for March, and it showed that 62,000 jobs were created in March. Now, historically, this has been well over triple digits, but in the economy the last couple of years, we've seen significantly less than that. So, well, it was a decent jobs report. It definitely is nothing compared to what it used to be. And you saw medium and large size businesses actually lost employees, and most of the job creations came in small businesses. Then into the BLS jobs report, or Bureau of Labor Statistics, or as I like to say, a bunch of BS lately, because it showed a blockbuster number. It's amazing. Showed 178,000 jobs created last month. And you had 7,000, negative 7,000 revisions in January and February, because February was actually a negative number. And so they're showing a huge number this month. It'll just be interesting to see what next month brings if they have big revisions again. Because again, if you remember last year and in the past couple years, there's been well over 1 million jobs that they said were created that never were upon revisions. So the market is not taking the BLS jobs report as seriously anymore because whatever they're doing is not working. Then into the consumer price index, or CPI report for March. So it showed the headline was up 0.9% month over month, and core is at 0.2% month over month. So headline total is at 3.3%, core is at 2.6%. And really this is because of oil. Oil was a major contributing cause. Nothing else has been, really big in terms of the market movers for inflation. Really all came from oil. So with the conflict in Iran, oil has shot up. We all know that with the gas prices we're paying. And that is where inflation has ticked up, which is obviously not good news, but nonetheless, that's where we are for the consumer price index. Now to PCE. So this is the Fed's favorite measure of inflation. Now this is a little delayed. This was for February. It showed that headline was up 0.4 as well as core. So headline is at 2.8% with the PCE and 3% with the core. Again, we'll see what oil does as we go through this. In the next couple months, you should see the PCE jump up also due to rising oil and gas prices. And then in existing home sales. So existing home sales for March were down 3.6% month over month. They're down 1% year over year. Now the median home price is at 409,000, which is up 1.4% year over year. Now there's 4.1 months supply. Now this is good to know because 4.6 months is a balanced market. So we're still technically overall in a seller's market, and 18% sold for above list price. Now with the conflict in the Middle East, let's see where mortgage rates are looking this week. So right now, the Fannie Mae 30-year fix is up 14 basis points, which is good news. And as you see the chart, red is bad for rates, green is good. Obviously, when the war started, rates got worse and worse and worse. Now they have gotten better because there is hope in the market. Well, actually, the real reason is yes, there's hope in the market that something will happen as oil prices have come down a little bit. But the biggest thing is that shock in oil prices could lead to recession, because typically when oil prices go up that much, spending is slowed down on everything else, because now instead of paying $50 to fill up your car, you're paying $100. And then all of a sudden now every fill up, you have $50 less to buy other things. So it ends up being recessionary for the economy. And as soon as really the market has figured out that that could be what's going on, then you've seen mortgage rates improve, because if we get in a recession, well, that's good for mortgage rates. So that's why I've seen a mix of red and green, no doubt about it, still volatility, but mortgage rates have gotten better, not to where they were before the conflict, but nonetheless, they have gotten better. And again, it's one of those times where literally within the same day or over the weekend or overnight, something happens and then rates can be totally different the next day. So it's overall a volatile market. It's not still a floating market, just because every piece of news is impacting rates, but nonetheless, they have gotten better than they were. And that's it for this week's market wrap. And don't forget, we specialize in reverse mortgages and cash flow loans for investors and self-employed business owners. Have a great week.